Hey folks, what a view behind me. I'm at Blackpool Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackpool Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackpool Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
What's going on, guys? Hope everybody's having a good weekend. Coming to you live with another week of breakdowns. Again, it's Brinks Trades. If you guys don't know me by now, or if this is your first time kind of tuning into the channel, this is the basically where I come on here and do the breakdown for the indices and futures markets. So again, my name is Brinks Trades. I've been a day trader for a decade now, as of last month. So I'm really happy to still be in this industry and still be doing things and surviving, because it's really like the NCAA tournament. It's surviving in advance, right, every week. And so, yeah, I've been doing this for, a decade now. And every week I come on here and do the breakdown for the futures markets and the indices markets. And so you'll see me break down a lot of trades and basically kind of talk about, things that I've done over the past year and or past 10 years in trading, past week specifically, based on last week's projections, kind of talk about some trades, what I think is going to happen this upcoming week, and answer some questions. So I'm glad to be on here. This has been about a year and a half, coming up on 2 years, I think in September, that I've been doing this pod or this live stream. So I'm happy. It's been a lot of people have been affected by it, and seeing a lot of cool, growth from a lot of traders. Before I get into it, I love seeing where people are calling in from, and just seeing what commentary is on here. I know a lot of people watch this after the fact, so I try to make this live for the people that want to be on here live, and then the people that watch this, obviously later on in the day, since this is a global call, right? So obviously Cam lives in Australia, and so he's graciously allowed me to come on here every week and break down the charts. So again, I love seeing where people are calling in from. Usually we get people from Europe, Africa, Australia, so it's really cool. So Tony, shout out to Tony. So Tony is recently in the mentorship group. He is my one of my students now, and he's been honestly on these calls for the last year, even before he was part of the Profit Playbook mentorship group. And so it's been really cool to watch him grow. He's dropped a couple trading screenshots in there, and he's hungry to be a really good trader. So it's really cool to see that. So first things first, what I want to do is I want to go actually highlight a couple of my own personal trades for last week, and then we'll talk about what I think is going to happen this week based on last week's trading. So I'm going to actually share my Discord. This is something I usually don't do a lot, but I'm going to share kind of like the back ends behind my Discord. And so in the Profit Playbook, I have this section called Gains, where some of my students post their profit shots. And so got some people, obviously Hugo, not to air you out, Juice, obviously posted a lot of stuff. But my specific trades from last week, right? So when we talk about, being able to consistently grow your account week in and week out, right? It's not about usually hitting big trades in one day. For me, I take the approach that I want to have a lot of accounts and a lot of capital and just make small gains in those accounts, right? Week in and week out. Because, if you have one, maybe 50K funded account or a couple grand in your trading account, you make $100, right? That's cool. But if you got 20 or 30 of those accounts, right, then the money starts to come in and you can see it, and it's a lot less risk, right? And you can treat this very like a strategic game, and the game that it is meant to be, right? And so Just looking here, obviously the futures markets, that's 6 EM, that's the Euro futures. So I ended up taking a trade last week across all of my funded accounts, right? And so this resulted in an $8,000 day, right? So one account didn't get copied to. I don't know why it didn't, but 1, 2, 3, 4, 5, 6, 7, 8. So a little bit over 8,000. I think it's probably like maybe 8,200 or something like that. I don't know, but around that. So $8,000 day on that euro trade, and just to show kind of people what the trade was, it was on that bullish move that we projected the markets were going to do this week. So, a lot of this analysis, obviously it's not financial advice, right? But it does. You can use this to line up with your own analysis. Again, I'm providing a lot of this stuff for educational purposes and really just being able to let people match their own analysis up with this, but really just to prove to people on a week in and week out basis that you can really do this trading thing. And it's not something that you need to be, scared of, right? So, and there's actual real people that do this, right? Not everybody online is just a fake guru. So that being said, let me go ahead and share my screen and we can talk a little bit about the charts for this week. So let's go ahead and get into it. So dollar index, man. So first things first, man, we got to talk about the T word. So the T word is tariffs, right? I hope YouTube doesn't block me for saying that. But everybody, if you're watching the news, if you've seen a bunch of stuff online, this affects everybody that trades currencies. This affects everybody that trades indices, right? It doesn't matter where you live in the world. If you're a trader and you're trading these markets, this is going to affect you, right? So indices, currencies, futures, whatever, it doesn't matter. Tariffs is the T word of the day, right? So there's been a lot of tariff policies that have been passed in the past couple days, really, that have really affected the market, right? Now, I will say this. I'm a firm believer that one, news follows the trend, one, and two, there is a conspiracy theory time, but there's a background algorithm or there's a background kind of people that control price, right? And so a lot of the time, news is going to follow what those things are playing out in the markets, right? And what those things are saying. And so, with that being said, um, tariffs usually mean a couple of things just on a fundamental level, right? So, tariffs usually mean that the dollar, um, tariffs enacted by the US, let me put it like that. Tariffs usually strengthen the currency of the market that enacts them, right? So when we talk about the dollar, right, a US passing tariffs is going to, in theory, be good for the dollar, at least in the short term, right? But it's also going to cause stocks and commodities and things like that, global businesses or businesses that have obviously parts running in different parts of the world, those things are going to suffer, right? And so usually there's this inverse relationship between dollar and, obviously other currencies, but then also dollar and stocks, right? So tariffs, good for the short term dollar, should be at least, but bad for, indices and things like that. So with that being said, um, there's a couple things that are going on, and so I keep that in the back of my head, but I also run with the idea that these markets are controlled by an algorithm, right? And I've said this multiple times. My students know this. Markets are controlled by an algorithm. They drive price, and they deliver price, and they move from areas of liquidity to other areas of liquidity where there's buyers and sellers at, right? And so a lot of stuff is algorithmic, but at certain times, the market makers, the people that control the people, how price moves, can enact and step in and make things more volatile. So in and of itself, one news release or one release does not cause the markets to go crazy, right? We know that. So that being said, let's look at the charts. So I keep a lot of that in the back of my head, and I'm wrestling with a lot of different ideas and kind of theories about the market while I'm looking at things too. So when we talk about dollar, right? So what did we want to see last week? We wanted to see the market trade back up into this range and then go under, right? And in a moment of transparency, there was a brief second last week when I was talking to my students that I actually thought the market was going to invert. And so basically when we inverted this fair value gap, I thought we could go a little bit deeper into this fair value gap before we turned over, maybe run that high and then turn over. But we The next day closed right back below it, and then the day after that we gapped down like crazy because of all the tariff stuff, right? And so that's basically trading down to this level. And so our overall thought process for the week was that we wanted to see the market trade back into this green box, which is our weekly fair value gap, right? We wanted to see that happen. We got that to the dot. Price stopped just shy of consequent encroachment. Now it's crazy with all this tariff situation and all these things going on right now that price literally stopped to the tick, right? At the level of this very distinct level that we called out over a week before any of this stuff happened. I did not even know the tariff announcement was coming this week, to be honest with you. I knew it was something that was campaigned and talked about, but it's crazy how price was driven directly to that moment. Our actual target for this week was this level here, which we pretty much gapped down and took out that day. So we were bearish, right? So what do we want to see here? How do we want to see the markets kind of rebound from this? Well, because we're bearish on the dollar right now, right? There's a couple levels that I'm going to be looking at next week that I think we could potentially run to. And again, if you guys have comments, questions, drop them in the box, because I'm combining a lot of different things here. I'm combining like technical analysis with basic economic theory, stuff like that, right? Which is stuff that you need to know as a trader, right? You shouldn't be having your money in the charts without knowing a little bit of at least fundamental stuff, right? And just basic relationships between assets, right? And I talk about that all the time with my students, right? What is dollar doing as king? Dollar is king. So in relation to dollar, you know how all of your assets you're trading are flowing. You should be able to use dollar as an opportunity to really, align yourself and your asset with that. So again, what are we looking at here? Well, we left this huge gap, right? And this is essentially a volume imbalance. Technically, the correct term for this is going to be a new day gap, right? And so this new day gap is really telling us, what the market is and the sentiment is. And so how I treat these gaps are like basically just to get a read, right? And so ideally, I'm still sticking with this idea of bearishness. You don't try and catch a falling knife, right? And even though the markets are not in alignment right now, I want to see dollar continue to go low. But I also want to see too. So that's gonna, project a couple circumstances, different like instances and how we think the market should potentially play this. So really, since we're in a downtrend on dollar, I want to see this market continue to go lower. Now, with that in mind, I'm keeping in mind what I just said about tariffs and how they usually affect currencies. So ideally, I don't want to get in front of a falling knife, right? If there are opportunities to continue to short, I want to see this retest this gap and see if we can continue to go lower. Now, in the event that we invert this gap and take out this high, I'm going to be looking to go long, right? Especially if we can invert this initial range here, this civvy here that's sitting right here. Let me get rid of this just to make it more clear. So I'm really looking at this gap to see how we should be playing. Because again, in the back of my head, I'm keeping fundamental like economic theory there, right? Like in theory, the market should be going down. If tariffs are enacted, the dollar should get stronger, at least in the short term, right? But again, we're still in a downtrend. So I do need, the technicals to line up with the idea or the theory, right? And so we need to break a market structure to go higher. So what I'm going to be looking for is really just how the market reacts to this gap. If we wick back into this again, and it just really shows a hesitancy to really break through this, then it's going to be continuing to be shorts. And again, if we break structure here, right? I mean, really, I would say if we take out this fair value gap in this range here, so I'll just say this level here, if we get over this high, then I'm going to start to look for longs. But ideally, I got to keep running with the trend. So that's dollar, right? So ideally, we're bearish, but we can see a world where this could be bullish, right? So let's go to euro. And I'm going to pull up pound as well, too, because I want everybody to see this, right? Because this isn't actually something that I talk about with my students all the time. And it's this idea of divergence. So basically what happened on Euro last week? So we got caught in a trade that I lost to start the week off. And I thought the market was ready to reverse after we took liquidity here. So coming into Monday, what we wanted to see back down, take this low out, and then go higher. What we actually got, if we jump down to the 4-hour time frame, is the market traded back into this range. I initially thought once we traded back in here, we were going to be good. We actually inverted this gap. If we speed this up right here, and I thought initially once that happened, the market was going to keep running lower. So I ended up shorting and see if I could get a long-term short, and we didn't get that. So we basically went long, and this is where I made that 8,000 on that trade, basically right here, right? And so what am I looking at going into this week? Well, there's a few things that I called out, and if you guys are in my mentorship group, I dropped something in the chat earlier today or yesterday, and we were talking about the idea of trendline liquidity. Right. So the idea that trendline liquidity is a buildup of a buy side or sell side liquidity, right? And it's just very simple concept. There's money above ties. Based on everything we're seeing here, I want this market to continue to go higher. It also aligns with the idea of a bearish dollar. So ideally, what I want to see happen is to continue to go up. And where am I looking at? Well, looking at these relative equal highs right here. That's where I want to see the market eventually go to. Now, when I pull up pound in a second, so again, I guess before I get there, looking at things from the weekly level as well, just to kind of get a higher, like the highest time frame, right? There's a couple of things here. Obviously, we have this weekly fair value gap back into. Make this red, as you guys can see. So the market traded into this, completely mitigated this, picked up all those orders, and then traded above, but still closed above the high, this previous high, and this. This is a strong wick. So I honestly, based on this, I'm not really comfortable going long just yet, even though I do think we will go long. I want to see a couple things happen. I want to see bullish sentiment that carries us potentially over this gap, and then I would look for long opportunities from, what is this, 1.1090 to 1.231, so somewhere in that range to take things higher, and or I need to see something that causes the market to want to continue to go up coming into the week. Or I want to see the market close above this level here, consequent encroachment of this wick, which is about even with consequent encroachment of the gap. It's a little bit higher. So this level right here is where I'm going to be watching, and I'm going to be long, especially if we get a daily close above this high. I'm going to be watching this to see. So not that I won't go long over this, or if I find if there's a really strong momentum, because this range is only about 60. It's actually a pretty big range. So the thing about the market is that when it hits a level, when it hits a key level like this, you have to kind of take a step back and see how it reacts to these levels once it hits, right? Because in theory, we're bullish, right? We want to see the market continue to go higher, right? But we just got a huge level here, right? Huge level of sell side or buy side liquidity in this gap. So now we got to ask ourselves where the market's going to go next, right? And we're playing a guessing game where in theory the market should be bullish because this is an uptrend, but we just hit a major level. So I need to see some lower time frame like confirmations that we want to still keep going higher, right? Before I just hop in this, because you could try and long this and then this could turn over and then turn around and go. So you really got to ask yourself, And we'll know more going into Monday and Tuesday. Obviously, if this is confirmed or not, but this is what I'm going to be looking for. I would say in the event that we invert this level here, at 1.091, that's going to fully let me know, right? Because this could easily be consolidation, manipulation, and then distribution. So I'm going to sit back and watch, but ideally with this, I'm going to go long on this. And I'll show you actually another example on GBP that kind of lets me know that we could still be going long again. So Euro did some, or GBP or pound futures, doesn't matter which one you trade. I trade the futures market, but same idea here. GBP did the same thing. It wicked all the way back into this, right? And it's traded back and actually closed inside of the range, right? And so it just turned around and tanked. So this could be in line again with that economic theory that I was talking about, where tariffs are good for the dollar and bad for opposing currencies that don't, obviously that didn't enact the tariffs, right? So what I'm looking for, again, this looks very consolidated. This could be manipulation up and then distribution down. So I need to see some. We didn't really just yet. We did trade it back to an area of liquidity. So again, I'm still watching this because this could just shoot right back up, and it would still make sense because there's no broken structure, right? So what I'm going to be watching for is how we invert certain levels. Like if we take out this low here in this gap that we just traded into, if we invert that, then I might look to go lower, right? I might look to take these things lower. Or if we end this week, again, very similar to the dollar, if we end this week above consequent encroachment, then I'll be more likely to try and go long on this next week. So I'm definitely, I'll make a note of this. I want a weekly close above this level. And that's going to confirm to me that we're going to go long. But right now, again, we hit a major target. We had a huge reaction from that target, and that was all Friday. So again, like I said, tariffs in the short term are actually good for the currency that they are enacted with, and bad for the ones they're enacted against. So this could be the start of that, where we go lower, right? And we're reacting to that bullishness in the dollar, which means we probably would invert the fair value gap there. So again, situations like this are not as cut and dry. You really want some more market information. There's going to be weeks where you come to the terminal, you're like, oh, this is an easy play, right? Like this past week was a very easy play. We traded up into this range, cool. There's other weeks where it's like, nah, I need to see the market show me something before I start moving. So, and this is going to be one of those weeks, because this easily could wick off of this. We could definitely close below these lows, took liquidity. So this could be the start of a shift where we start running back toward down, right? And if we pull up, the Australian dollar, right, it's already starting to go to hell. And NZD is doing the same thing. Matter of fact, NZD and pound, NZD and Aussie were definitely bearish. They basically didn't even leave this range since really Christmas, the beginning of the year. So this looks extremely bearish to me. Again, if you're looking at those, and these might actually be the easier reads, to be completely honest with you, these markets here. So I might actually even look to short these. These might be the easiest pairs to trade this week. And that's just kind of like my tip. I don't really trade these too often, but yeah, I would say that maybe even Aussie or 6N, which is the New Zealand futures, are the easiest ones to actually look at potentially, because we had a lot of consolidation, manipulation up, taking out these highs and then going lower. So that'll also be on my watch list this week. I'm looking at gold futures right now. Again, the idea here, if we look at a weekly time frame, gold is going to be a safe haven through uncertain times. It's usually like that. If I had to guess where I think gold is going, I think we are going to be weekly bearish. Oh, let me go to this comment section really quickly. So skip a just indices you trade. I trade everything. I trade it all. But I would say that right now I'm kind of focusing more on currencies and forex pairs, like only because this is 202. Okay. Someone said they can't see anything on my chart, so I'm gonna do this. Make this a little bit bigger. So Raymond says I can't see anything in your chart. So let me know if you can see anything now. I don't know if it's, let me see if I can make me smaller and do that. So let me know if you still can see anything. And if anybody else is having an issue seeing things on my chart, let me know. But yeah, so ideally, this is what we're looking at, right, on gold futures. So going back to the other question, sorry, I got thrown off. I trade everything, but a lot of time on euro futures right now, or in pound, because I think currencies are going to be easy reads in these markets. So I would say, like, if y'all are trading NASDAQ, I mean, your bias, and we'll talk about it in a second, but your bias has got to be shorting. There's no way in hell y'all should be trying to buy anything right now, unless it's for your long-term portfolios. And obviously, I'm not a financial advisor. I can't give financial advice, but I can only speak for me. Like, I'm not going to be trying to buy anything unless it's a long-term play. But like actually day trading wise, man, there's no way in hell I'm going to be trying to buy anything at all. So look at this. So going back to futures. Again, we know that market's running lower. It's running towards areas of we actually took it low, right? And obviously, long term, I do see this going up still. I think we got a lot of room to run. I think if you're trading gold, this is a good market to be in right now. We did invert this gap, even though we did take sell side there. We inverted this gap, and so I'm going to be waiting on a couple of things. Because we did invert, I want to see if we can get down here. This is that weekly fair value gap, which also aligns to this level. So this could be a really good fake out if we come down here, run liquidity, and then turn around and go up. So you can play this one of two ways. All right. You could wait for the market to come down and run last week's or Friday's low, or you could wait till this comes back in this range and buy. I would say either way you cut it. Once we are back above this gap, oops. And I'm gonna make here that says I'm longing anything above this gap. Right. So even if we don't get all the way down here, I'm still going to try and long this once we get a daily close above here. And then this will obviously be the weekly target. Right. So that's kind of be what I'm looking for and at is do we dig down here? Cool. Do we, not dig down there, or maybe just take the low right there, take the sell side liquidity here. right? And then go higher. Cool. We can do either one of those two things, and I'm just gonna mark both options out. But this will be the ideal preferred is we come down here and somewhere in this range we start to turn around things and go higher. But once we're above this high is when I want to see I'm switching my bias back to long. So maybe I would try and short this right until we get here if there's a really clean setup. But most likely if I'm trading gold, I mean this thing is so bullish right now that make sense to it doesn't make sense to try and short this long term unless you just get a crazy setup where it's so obvious and you can't take it or you can't miss it. But I would say somewhere in this level here is where I would be looking to go long or back above this gap. So probably here if you're a little bit more risky, here if you're a little bit more conservative. So that's what I can see for gold. Let's go ahead and go to indices. Again, NASDAQ is the one. And NASDAQ is, I mean, this is crazy. This is crazy. Yeah, if y'all have long-term portfolios in the markets, I'm sure in the long run, everything will be okay. I know this is a hard week for people that have long-term investments because it's crazy. We just dropped. I mean, we dropped almost 20% in a week or since February 14th. So in about a month and a half. So, but this is going to be a great buying opportunity, right? I mean, obviously long-term portfolio stuff, right? Like so if y'all are stocks, that's going to be a really good play for y'all. I think that's what everybody's finally starting to learn is that this market is a game, right? So if you're long-term investing, cool, you're going to be okay. Like the chance that this just crashes and goes to zero, it's probably not going to do that. But day trading wise, yeah, no, you would have blew a couple accounts for sure. So what are we looking at? So we're extremely bearish, right? So I can't recommend trying to catch a falling knife and trying to buy this. This can literally they could take it to zero all the way if they wanted to. They're not going to do that, but that'd be crazy. So I'm looking at where's the level of sell side liquidity that we can run to, right? We got a few levels. This is the level that I called out, I think, even MNQ. Yeah, on MNQ. So I'll just use this one. But I think this is going to be the target we're going to run to. And then if we do get very strong bearishness, then I'm looking at this next level here, which is the low. So I want to see what the market does at this level here. It's an unmitigated fair value gap. Like price has not ran into it just yet. Make that a little bit bigger. Right, so that's the level that I'm going to want to see price get to. But in the meantime, daily time frame, I'm gonna jump down to the 4-hour. Where can we go? Like where's a good place that we could potentially like catch the high, right, of the week to potentially ride down? I mean, I could see us doing this. I could see us doing something like this. Looks like we're rebounding. Looks like we hit the low. People start buying, right? And then we turn around and tank again and keep going to that low. So that's ideally what I want to see this week. Me personally, I'm not trading anything that's this volatile right now because it's like, again, you have to not only do you have to manage your trading, but you also have to manage your emotions, right? Too. And this is crazy. This will have you blowing accounts because you thought you caught the low or you thought you caught the high of the trend, and so this is what I would look for if I was trading this, but I'm not trading this at all. And if anybody trades futures, I know a lot of these futures firms have started giving out like warnings about how far the market's falling and trying to trade in this and trying to, basically saying like, be careful about blowing your accounts. So I told my students this past week the same thing. Like, if you have another asset class to trade, cool, because we all know it's going down, but the problem with these huge ranges in volatility is that the market can just whipsaw. Like it could just do something like this where it runs all the way back up to these mitigated places, clears all that liquidity out, and then just runs right back down. And that can be in a day, right? The wider swings, the more volatility you get an asset, the more crazy the swings can be. So that's the one thing that I'm watching. Again, US500. I think it's the same thing. Actually, let me go to ES because I think this is futures. Yeah. So this is what I had. And so last week, oh man, this went to hell. Good Lord. Good Lord. I called out two levels that I wanted to see the market hit. I wanted to see the market hit consequent encroachment, and then I wanted to see it take sell side. And it closed Thursday, yeah, by hitting exactly on consequent encroachment, and then Friday took sell side. I did not think it was going to hit this fast, but the S&P is lost like, yeah, I mean it's lost about 2,000 or about 1,500 points, 1,200 points since the beginning. I mean we haven't been here since the beginning of 2024. So pretty much all of last year's growth was kind of wiped out in like 3 weeks, 4 weeks. Where are we going? Well, again, I think on the monthly time frame, if I go to the monthly, we broke structure, which is not a good sign for anybody that thinks this is going to go long. So we broke structure here. I'm looking at stuff like this. I mean, I think we could run for monthly fair value gaps, monthly levels. Like this level here is a good area. Maybe it's a support level here. But I mean, if we're looking at monthly levels, we could run to this range. It's where I'm going to be watching. Depending on how bad this is, I mean, like, we could see it run right through this. But again, I would not be looking to buy anything. 5,300 to 4,000. So this pretty much happened back in 2022. But for your long-term portfolios, man, I mean, you would have already been up 50% in anything you invested. So a lot of people are saying this is like a generational, wealth buying opportunity, right? Anytime the S&P crashes, it really sets the stage for people that long-term invest to come in and buy up the market. I mean, look at these. Like, imagine if you would have bought around the recession, right? Your money would already be 5x in like 15 years. So imagine throwing 100 grand in here, right? And holding on to it through the recession, right? So this is obviously everything looks scary, but the comforting thing is the powers that be, they're going to make sure that their money is protected. So unless they're moving their money out of stocks and investments altogether and they're putting in something totally different, I think in the long term we'll be okay. So let me get these charts. Someone said I need a rally on US30 and NAS this week. Nah, I mean, you might get a rally to start the week, like I just said. But dude, I would not be trying to buy this. This is, yeah, you try and catch the falling knife, you're going to blow your account every single time. So you just got to let things play out or move to an asset class is not moving this tactic. Now, if you just said, forget it, I'm a full porter trade and try and catch the high of the week and just say whatever, run it down. That's between you and God. But yeah, I'm kind of good on this market because of that reason. I kind of like stability. I like stuff that chops around a little bit because it gives you a little bit more frame of reference. This is kind of like manual intervention. Like the market makers are coming in and letting them and doing whatever they want to do, just getting all this money back. Dow Jones, same thing, right? This thing fell 4,000 points this week. In the last 2 days, 4,000 points, but about 7 since the beginning of the year. So this lost about 20% too. So the last time we were this low, it was December of 23. So about 2 years worth of progress wiped away in about a month. Yeah, I would not be trying to go long on this. But man, if you're short, if anybody shorted this and you're still in the trade, dude, you're probably about to retire soon. You're probably about to retire. Yeah, that would be crazy. So yes, where are we looking at, right? So if we go to the weekly time frame, again, I'm just trying to guess where the market's gonna go for the next week. I can't really predict longer than that. So a couple levels here. We tap that fair value gap, so this could be a good area. I don't think that'll happen, but I'm looking at two zones. This fair value gap at 37,220, and then this low here. We're gonna be the two areas that I'm watching. And that low is at 34,077. And the part that sucks about, or the crazy part about this now is that everybody's starting to panic. So you're going to see more and more, like, I mean, I would not be surprised if we opened up all these markets with a gap on Monday, right? And they are trying to get out and sell, get rid of their, like, dump their assets. Because, most people are not day traders. They are investment. They're just people who put money in their 401ks, or they are, people on hedge funds that are trying to get rid of their position because they're getting killed. So most people are not made to see this. Like we come on charts every week and we see a dump and we're like, okay, cool. This is just a pullback to a level. Most people see this and they see their retirements, they see their houses, they see their years and years of work getting wiped away. And they're like, shoot, I can't do this. Like I got to get out of this. I got to protect my assets. It's a normal thing. Right. But day trading, we train ourselves, obviously day in and day out to look at stuff, dump and be okay with it. Or even short it, right? Try to make money on the shorts. So, it's another day to us, and we know the market's eventually going to go back up. So, just kind of have to do whatever. You said why NAS100? I don't know what your question is, man. You said I don't know if you're asking me why NAS100 instead of another asset, or if you're asking me why NAS like NQ1. But it's going to be the same thing. These markets are the same. They're just a little bit, the volume is a little bit deeper because they're technically different assets. NAS100 and NQ are technically different assets. They're going to have different volumes in them. NAS100 is the global world, the world. NQ is what we can trade in America. So you don't live in America, you can't trade. So you have to trade it, but it's the same thing. Like these are not going higher. So I would be looking to short if you're trading those, or just stay away and move a different asset, right? Something that doesn't not move as crazier right now, which is cool. You can trade anything. It's really about your personal temperament. But right now I'm kind of having all my students kind of like look at currencies just because this is kind of a crazy market to trade. Now, again, if you just want to throw a challenge out there, buy a funded account, or buy a challenge and just say short it, like full port it, that's up to you, man. But I'm trying to maintain my capital and I'm trying to find really, really good opportunities to trade. Because again, as you guys can see with the 8,000 that was made this past week, it doesn't take a lot to get a good setup. That was 50 pips. So 50 pips across a few funded accounts will change your life, if you could do it consistently. So that's all I got for you guys. I'll stay on for any questions if you guys have any questions at all. But yeah, I mean, that's pretty much everything. So again, bearish, potentially waiting to see more information on dollar, right? I think I want to stick with the bearish bias in mind, but I'm not opposed to it changing to a bullish bias based on what we're seeing. So I really just want more information on that in Euro and GBP. And then gold is going to be really safe, probably set up this week. And then AUD, USD, and NZD, USD, or Aussie, and New Zealand futures might be the safest moves, to be completely honest. So we'll see how that works out. But yeah, I'm looking to have a good trading week, and we're gonna have some fun. And then between New Zealand dollar and Australian dollar, I think I probably would be looking to take New Zealand a little bit more. So yeah, so that's what we're looking at, and hopefully you guys have a good rest of the week. Yeah, again, I'll stay down for any other questions, and then if you guys, and shameless plug again for the Discord, but if you are not in my free Discord, join the free Discord. Basically, this is where I do updated analysis. If anything changes, or just want more motivational advice or whatever, um, you know, you can feel free to join this Discord, and I give that out. There's really two kind of like settings for it, or two main divisions. It's where I have my actual mentorship chat too. So the people that I actually work with one on one every week with trading and kind of getting them better. We do live streams. There's an actual course where you can learn from me directly, and things like that. But if you're interested in just being part of the chat, you want to be in a community of traders that talk about trading, and it's a little bit more inspirational. I'm in there pretty frequently, just dropping advice. You can join that. Again, that's free, and then the mentorship obviously is there's a fee attached to it. But like I tell everybody, there's nothing wrong with just hopping in the mentorship free chat just to see what's going on in there, and obviously get a little bit more motivation. So I'll drop a link to that right here. If you give me 1 second. Um, so if you join that link, you can get into pretty much the Discord for free. And it's basically just the free mentorship or the free community chat where you see me post again advice, or you might see me post updated analysis based on here. But the fun stuff, the real stuff, is the actual mentorship, where we teach obviously how to traders how to approach the market. If you basically take you from 0 to 100 when it comes to day trading, especially in the futures and currency markets. So those are going to be the main markets that I focus in on. I don't trade stocks. I don't trade options. This is the market that I do things in. And so, yeah, so it's been really cool to watch a lot of my students. Hugo has been in there for a while. I'm starting to see him post a lot of winning trades and really good analysis. We've got, obviously Tony that was on this call too. And there's a lot of other people too that I'm leaving off the list just to kind of protect privacy, but just, the people that have been in this, been with me for a while now. So it's been really cool to watch them grow. I want to train. My goal is that I want to get, I want to get 1,000 traders and teach them how to really see these markets and really just help people. And the biggest thing for me is that I just really want to be able to provide opportunities for people to make income outside of their jobs, right? I mean, this stuff has benefited me like crazy, and so and just just seeing this stuff and being in this industry for a decade and seeing people change their lives, quit their jobs, buy cars, take care of their loved ones, do investments, take money and throw this into investments, vehicles, whether it be like real estate or their traditional investing like S&P and all that stuff like that. Like this can really change your life, right? It has the power to change your life. And so I want to be one of the people that are helping people to do that. And a lot of people have shared and invested into me. I probably spent anywhere near close to 5 to 10 grand on just education from people over the past decade, and a lot more in losses, and a lot more in learning losses, right? So I just want to be able to get back to people as much as possible. And so again, this if you're patient and you don't try and rush the process, I mean, there's the opportunity here to really change your life. And so I can't promise you that you will, but I can promise that you'll learn how to reprice better than anybody. Um, So yeah, so that's the link again. If you're interested, join the chat, and again, it's free. It really says free in the title. So, someone said, "Which trading strategy do you learn from? Recommend learning from?" So, I am an SMC trader mixed with a lot of different concepts, right? So, in 2015, I started learning the market maker method. That kind of is the framework to what I do now. I don't recommend taking that course because it left a lot of things on the table. There was a lot of stuff I didn't understand, but it gave me a basic understanding of the market makers or the people that drive the markets, and some basic, theory when it came to like that. And then I took a couple of other courses from a few other kind of like well-known people on social. There's some people that really helped me. There's people that didn't. And then a lot of SMC stuff too. So I took a lot of that and kind of made a hopefully a cohesive language that people understand. Um, so I'd say like it's two or three. I would say I took a lot from a lot of different people, but I've also had 10 years to do this. So my advice to people is if you don't want to wait 10 years or years to get to find a good mentor, I would say a good mentor, a good trading strategy should have the following things. It should be somebody that you've seen their results, they're willing to share their results, and it's not just screenshots of winning trades, but they can do stuff like this. They can hop on calls, they can break down the trades, they can show you results. Obviously, results are a big thing, but really they can show you that their concepts work over time. They can provide stats for their winning and losing, because the way that I see it is, if any of these traders that on social media think they were, you know, good and they wanted to go work for a hedge fund would want to see a track record. A hedge fund would want to see proof of their executions, right? They would want to see the thought process behind your trades because they're investing capital into you. And so basically you're paying these people to learn how to trade from you. Or to learn to teach you how to trade. So they need to do the same thing. They need to provide proof. They need to provide thought process into the trades. And so a lot of this I do for free because I want people to see, one, that it's possible, and two, I am who I say I am, right? And so I've done this. I've had multiple account challenges and account builds where people have seen me take accounts from $10,000 to $40,000. It's documented on the Telegram that I still technically have open, but I am going to be closing at the end of the month because I'm funneling people to Discord. But I've done that a couple times. I've passed literally $1 million worth of funded challenges with Apex, and I've passed 5 Top Step accounts, so I'm maxed out with Top Step. I've also accounts right now, and obviously some of those accounts, were profited, were funded. You guys can see that on the channels that I've showed. So I would say you got to learn from somebody that actually can show you some type of results, right? And more importantly, the thought process behind it. So if you guys have that, then you should be learning from the right person, and then somebody that just works with your temperament. Because the last thing is really just like, a lot of trading styles don't work with you individually. I'm not a swing trader, and everybody who watched me try to swing trade last week, right, on that reverse, right, like, yeah, you guys saw me get it, I took a loss, right? But like, in an ideal world, I would love to be a swing trader, but I don't have the temperament to like take a trade and then not check my phone every 10 minutes, right? It's just not me. So I'd rather get in, look at the markets, see what I got to see, sniper mentality, take my shots, get off, and then come back the next day, the next week, and really just do it all over again. And that's just me. And over time, hopefully my trades are getting bigger. So maybe it's $1,000 trade if you first start, and then it's like a $2,000 trade or $3,000 trade a few months down the line. You can consistently grow your account, right? So yeah, so you got to find somebody that temperament works with you. If you're a swing trader, you want to be a swing trader, you have the personality for it. You need to find people that are swing traders, people that are short-term position traders, right? Or they're just in a session and out, or they're day traders, or they're holding the trades the entire day. Like whatever they do, you need to be able to do too. So hopefully that answers your question. And Tony said this, man. What he said it the best. He said, once you learn everything, it's life changing. And I know you hear my dog in the background, but once you learn this stuff, man, it is crazy. It changes your life. It changes the way you So I don't know what happened, guys. That was crazy, but but like I said, it changes your life. It changes your the way that you see the markets. It changes all that stuff, man. So I'll leave it at this. If you guys need any more advice, I had to switch to my mobile phone. You guys can see me doing this, but hopefully you guys get a lot out of this. Hopefully you guys change your lives. Hopefully you learn, about the way that the money and the markets work, and that's the biggest thing that I want to leave y'all with. So again, check the links, right? If you want more interest, if you're interested in being a part of the mentorship, but I'll leave you guys to go. And hopefully you guys have a good rest of the week. So peace. I'll catch y'all next week. Bye.